The big theme I think I took away was, without doubt, the sheer weight of capital in the market, which we heard from one of the speakers, which was interesting. I took away the actual performance last year in terms of being better than actually quite a lot of people thought.
I think the makeup of those investors is changing. There is an inordinate dominance of private investors within that pool now. And that has quite big ramifications for how the market operates, how assets are marketed and sold, and the pricing dynamics of these things has changed a lot.
And the big news in terms of the yield differential for the regions and the amount of money looking at the regions, really encouraging in terms of the future there. So although the international investors are also good to hear looking at the regions, I think regionally just the domestic investors looking for the yield, very encouraging for 2018.
We have a huge amount of first-time buyers coming into London. So last year there were 15 first-time buyer deals of over 100 million lot size. Last year in London they were 18% of the office take-up for the year.
Central London retail has benefited from a cushion from international tourism, tourists visiting London, in particular because of the weak sterling. Equally, we have also seen changing the nature of occupiers in central London.
With the threat of online competition, with all the changes to the high street, you need to know what you're doing, you need to be an expert in what you do. Not everybody's going to win, but with us, with the good data we have and with our experience as well, we are able to pick the best deals at the right prices.
We feel very strongly that the city is strong and London is strong because of what the regions can also bring to the UK. So that is an international message for international investors. It's very, very clear to us that particularly the trophy buildings, the big buildings in the city, will need and are receiving investment from large investors from overseas.
WeWork are now the second largest occupier in London after the government and the largest private sector occupier. I think there are challenges for the investment market in dealing with that and challenges in terms of understanding those businesses. They are, you could argue, looking to still leave quite a bit of the risk with the ultimate landlord.
But specifically back to London, we are seeing values heading down to where we want them to be for the more value-add intensive product, or even for development sites, where over the past couple of years, based on the type of returns that we've wanted to achieve from that product, we haven't believed in the type of prices that you would have to pay.
We're keeping a very close eye on the supply-demand dynamic. The presentation mentioned the increasing supply, and we also have potentially a change in demand dynamic, particularly with the B word, Brexit. So again, we're monitoring that trend. Another key structural theme that we're focusing on is the growth in last mile logistics in London. Again, we see structural growth in that sector, and it's something we're going to monitor.